Ladies and gentlemen, good day and welcome to Current Infraprojects Limited H2 and FY26 Results Conference Call hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Thakur from Kirin Advisors. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Current Infraprojects Limited. From the management team, we have Mr. Sunil Singh Gangwar, Chairman and Managing Director, Mr. Chetan Dadis, Chief Executive Officer, Mr. Devrat Singh, Whole-time Director, Mr. Manish Sharma, Chief Financial Officer of the company. With that, now I hand over the call to Mr. Sunil Singh Gangwar for the opening remarks. Over to you, sir.
Hi, good morning, everyone. I am Sunil Singh Gangwar, and a warm welcome to all investors, analysts, and stakeholders joining us today for the H2 and FY26 earnings conference call of Current Infraprojects Limited. On behalf of the management team, I sincerely thank all of you for your continued trust and support in the company. FY26 has been a landmark year for Current Infraprojects Limited as we continue to strengthen our position across infrastructure EPC and renewable energy segments through focused execution, operational efficiency, and expansion of our project portfolio. During the year, we witnessed strong momentum across both our infrastructure and renewable energy business, supported by increasing government focus on power infrastructure development, transmission strengthening, and rapid renewable energy adoption across India. Our integrated EPC capabilities across substations, transmission infrastructure, solar power projects, and renewable energy management continue to position us strongly to capitalize on these long-term sector opportunities. Operationally, the company made significant progress during the year. We secured electrical EPC work orders worth approximately rupees 100 crore from JVVNL and Jodhpur Vidyut Vitran Nigam Limited for feeder segregation and house connection works, further strengthening our order pipeline and execution visibility. On the renewable energy front, we successfully commissioned three 2.52 megawatt RESCO solar power plants in Phalodi, Jodhpur, through our subsidiary companies, expanding our operational renewable energy asset portfolio. Further, we completed 585.6 kilowatt grid-connected solar rooftop project for THDC India Limited across multiple locations. In addition, through our subsidiary company under a SECI award, SECI, we commissioned a 1.85 megawatt another RESCO solar power plant at IIT Dhanbad. These achievements reflect our growing execution capabilities across utility scale and institutional renewable energy projects. We also continue to focus on strengthening our internal execution systems, project monitoring mechanisms, quality standards, and timely project delivery across all ongoing assignments. Our disciplined operational approach continues to support scalable growth while maintaining healthy profitability. Coming to the financial performance, the company delivered a strong performance during H2 FY26 and FY26, supported by robust project execution across infrastructure and renewable energy segments. For H2 FY26, the company reported total income of rupees 116.48 crore, registering a YOY growth of 153%. EBITDA for the period stood at rupees 15.71 crore with an EBITDA margin of 13.56%, while profit after tax came in at rupees 10.16 crore with a PAT margin of 8.76%. Earnings per share for the period stood at rupees 5.63. The strong operational performance was driven by accelerated execution across ongoing EPC projects, improved operational efficiencies, and higher contribution from renewable energy projects. For the full year FY26, the company reported total income of 161.35 crore, reflecting a healthy year-on-year growth of 77%. EBITDA stood at rupees 23.29 23 crore with an EBITDA margin of 14.48%, while the profit after tax increased to rupees 14.05 crore, translating into an EPS of rupees 8.31. The strong annual performance reflects higher execution volumes, improving operating leverage, and sustained focus on cost discipline across projects. Looking ahead, we remain optimistic about the sector outlook driven by rising investments in renewable energy, transmission infrastructure, rural electrification, and government-led infrastructure initiatives across India. With a healthy project pipeline, expanding renewable energy portfolio, and growing execution capabilities, we believe the company is well positioned for long-term sustainable growth. I would like to sincerely thank all our shareholders, customers, employees, project partners, lenders, and stakeholders for their continued support and confidence in Kirin Infraprojects Limited. With this, I request the moderator to open the floor for the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sohan Deshmukh from Peak Capital. Please go ahead.
Hello.
You are audible. You may please proceed.
Yeah. Good morning, sir. So my question is, the solar EPC revenue, which has grown nearly 4x in FY26 and now contributes the majority of the revenue. So how much of this growth was driven by execution of existing orders versus fresh order wins? And do you think this solar EPC to remain the primary growth engine over the next 3 years?
Devrat to answer. Devrat, will you take this question?
Yes. Yeah, sure. Actually, we can say around 50% was the 50 to 60% was the carry forward from the previous and around 40% was the fresh orders. And regarding whether this will remain the primary sector for growth in the next 3 years, yeah, I would say, it is a mixed answer because currently solar itself has, you can say, peaked, this has peaked a bit, but currently solar with BESS, battery energy storage system, this sector is picking up growth. So I would say solar and BESS, the combination of this will be the primary sector in the next 3 years for us.
Oh, okay. So the company has secured approximately 100 CR worth of project from Jaipur Discom, right? So
yes.
Yeah. So the Jaipur Discom will, like, management indicating that a major portion of the revenue will be recognized in FY27. So could you help us understand the expected execution timeline and revenue recognition schedule for these projects?
Yes, for sure. Basically, this tender was awarded in the last financial year, and the tenure for completion of these projects was around 15 months. And in the last financial year, out of this 100 crores, we was booked around 5 or 6 crores only. So the remaining portion of approximately 90 or 94 crores will be booked in this financial year as per the completion timelines of that awarded contracts, including both the JVVNL and JDVNL works.
Okay.
Yes.
Mm-hmm. So with India's renewable energy target of around 500 gigawatt by 2030, so which specific opportunities within the solar EPC does management believe to offer the largest addressable market for Kirin Infra over the next few years?
So, see, we are a EPC player and we always look for new tenders. And yes, a lot of tenders for solar energies are coming into the market. And on a everyday basis, we are bidding in new contracts. So definitely, we have a plan like for the next 3 years, we have to bid this much of quantum for the solar projects, for this much of quantum for the electrical projects, and this much quantum for the water projects. So we have a plan.
Mm-hmm.
And yes, as on date also, we have already bidded for 2, 3, 4 projects for solar energy only.
Okay.
Yes.
Thank you. Thank you for your answer.
Thank you very much.
Joining back in the queue.
Yeah, thank you so much.
Thank you. Ladies and gentlemen, before we take the next question, a reminder to all the participants, if you wish to ask a question, please press star and 1. We will take our next question from the line of Maya Nambiar from Digitrust Capital. Please go ahead. Hello, am I audible? Yes,
morning.
you are.
So thank you for this opportunity. So my first question is, the company has commissioned 4 RESCO power plants with long-term PPAs, right? So what is the targeted scale of the RESCO portfolio over the next 3 to 5 years?
Would like to answer this question.
Yes.
Yes. So the current 4 plants which we have, 3 are in Kusum and 1 is in the IT Dhanbad under SECI. So since we are majorly an EPC player, RESCO plants is our focus, but not they don't supersede the EPC projects in terms of our attention and focus right now. However, in case a good project with good tariff and location and client comes up, we are always looking out for RESCO plants also. So you can say in the next 3 to 5 years, if you think from our perspective, we can look to have 1 or 2 more RESCO plants. If they are, if they match our expectations and tariff and, you can say they secure our capital, then sure, in the next 3 to 5 years, we can look to execute 1 or 2 projects.
Okay. So over time, does management expect EPC execution revenue or recurring RESCO income to become the larger value creator for shareholders?
Sir, ma'am, EPC will be always the primary, sector in which we operate. RESCO will always be the secondary one.
So my last question would be, despite a strong growth, EBITDA margins moderated during FY26 due to raw material inflation. So where do you see sustainable EBITDA margins settling once commodity prices normalize?
Yes, these margins will definitely be stable. Because of that, you just seen that we have 100% of the government projects for execution for this current financial year, and every contract has a price variation process. So the raw material pricing, which is increasing day by day, will not impact so much for that profitability segment, because we have the price variation process in that work order.
Thank you, sir. Thank you.
Yeah, thank you.
Thank you. Next question is from the line of Riya Jain from Orient Capital. Please go ahead.
Hello.
Yeah, hello, good morning.
Hi, good morning.
Yeah.
So I have 2 questions. EBITDA margins moderated during FY26 due to higher raw material costs. Despite strong revenue growth, if commodity prices stabilize and price inflation causes flow through, where do you see sustainable EBITDA income?
You are asking about the sustainable EBITDA margins for the financial year 27, right?
Yes.
See, I already replied this question just in the last question. So we are expecting the stable EBITDA margin for this financial year also, because the contracts which are under execution for this financial year is having the price variation clauses. So the increasing cost of raw materials will not impact it so much, because we already has that, and we have already applied for the price variations with the governments. So the increasing cost of raw material will not impact the EBITDA margins, and we expect that these margins will be stable for this financial year also.
Okay.
Yeah.
Okay. And we highlighted the use of robotic cleaning systems and cluster execution models to improve efficiency. Can management quantify the actual cost savings or margin benefits generated through these initiatives?
Yeah, definitely. I would request Deva sir to give insights on this robotic cleaning system. And for the cluster management, I'll reply later. Yeah, please. Please, yes, sir.
Yeah. So the robotic cleaning system which we use for our solar plants, basically they improve the efficiency by around 10 of the whole plant. So you can consider that whatever revenue, suppose from say one Kusum plant we are generating 10 lakh of revenue per month, you can expect a 10 to 15% increase on the use of just the robotic system from that.
Okay. And what additional operational levers remain available to improve margins without compromising execution quality as the scale of project increases?
Just suppose we in the solar sector itself, I can talk like currently we are executing projects like 2 megawatt, 5 megawatt, or say whatever 5 to 6 megawatt. We are looking in the next in this financial year to execute larger scale projects such as 10 megawatt, 20 megawatt, 30 megawatt at a single location. That would certainly help in increasing the margins, and as the establishment cost is more or less fixed. A 5 megawatt project can be a 10 megawatt project can be executed by a team which has already executed 5 megawatt project. So, but the quantum of work at a single location, if it increases, that definitely can improve the margin. So we are looking to get a larger projects in this coming financial year at a single location.
Okay. Okay. Thank you. Thank you for answering my question.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1. Next question is from the line of Priya Chain from Green Capital. Please go ahead.
Hello, good morning, sir. I'm new to Current Infra and I just need to understand few things. So, there's a huge competition in solar EPC right now. So what would be management, management identify Current Infra's strongest competitive moat, different from its peers, and I would like to know that our recent big execution and what technical expertise do you have, and if you can share some light on government relationship, how much of our revenue is from government projects.
I would answer the question in which you're asking what's our competitive mode. So basically, we have executed solar projects across all states, almost all corners of India. From you can say Uttarakhand to south. We have executed in Tamil Nadu, and in Gujarat in the west, and to Agartala to the east. So basically, these days tenders are coming of solar in which they demand certain capabilities which you have to demonstrate in the technical criteria. Like suppose you must have vector is coming in say Arunachal Pradesh, then they ask for experience in hilly sectors that you have executed project in hilly regions, or if a project comes particular state, say Tamil Nadu itself. So sometimes they demand that you must have executed a similar type of project in Tamil Nadu, to qualify. So as a company, whenever search for a tender, we try to do those tenders which have these, certain clauses which can give our company a competitive edge while participating, and we can, get you can say a premium for in those. So this is our competitive mode, that we have executed solar projects of any size, like say 100 kilowatt to say 1 megawatt to 2 megawatt in various corners of India. So that definitely helps us in qualifying for various tenders.
Additionally, the total quantum which we have completed till date is a 50 megawatt plus. So this is a big quantum which we have the certification qualification within our company, and there is a minimum completion project of more than 4 megawatt. So these all are the additional qualifications which gives us a competitive edge while bidding in the tenders. And one more thing, we have also maintained certain projects. You can say around 10 to 12, 15 megawatt of projects for more than 2 to 3 years. So sometimes tenders also, or the clients, the tenders which we are participating in, also ask for qualification in maintenance. So we can provide those satisfactory maintenance, certificates from our clients, which can definitely give us an edge over others.
Okay, so also just need to understand that which state currently is contributing more in our top line?
You are asking the total contribution from solar sector in the top line for last financial year?
No. I'm asking about revenue bifurcation by state. Which states are contributing more?
Okay,
currently?
which state is contributing more?
Huh.
The last year, Rajasthan contributed the number one in the total top line, and I believe after that Kerala was there.
Mm-hmm.
Yeah.
Okay, sir. So,
And this is again the
any
Rajasthan
guidelines?
state. Yeah.
Yeah, any guidelines you would like to quote for FY27?
Yeah, the same thing. The Rajasthan will be again the top contributing state for this financial year because we have a lot of projects from government and private as well to execute in this current financial year. And again, yes, we are still active in the all states which we have already put it in as the profiles because in Kerala, in Tamil Nadu, in Maharashtra, so everywhere doing aggressively business in current financial year also. We have orders from the clients.
Sir, I just wanted to know any guidelines you are quoting for FY27 for top line?
Oh, that is around 250 crores.
250. Okay.
Yeah.
Do you see EBITDA going up? EBITDA margin going up?
Slightly.
Okay. Okay,
Yeah.
sir. That's it for today. I'm looking forward to the updates.
Sure. Always welcome. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. Next question is from the line of Nidhi Purohit from Phoenix Capital. Please go ahead.
Hello. Hi, sir. I just wanted to know that net debt to equity has come down significantly in FY26.
I think the voice is not very clear.
Hello.
I'm sorry, Nidhi, can you use your handset mode, please? Your voice is muffled.
Hello.
Yeah, please.
Is it audible?
Please go ahead.
Yes.
So, net debt to equity has come down significantly in FY26. So, what are the key reasons behind this improvement? And going forward, what debt level is the company comfortable maintaining?
Manishji, you are asking what a P? Hello?
Hello. Yes.
I could not understand the question exactly, actually. You are asking what the PAT margins, you are asking what the EBITDA margins, which margins you are asking about?
Both, sir.
Both. Okay. So you are asking that the margins have been slightly decreased in this financial year. Hello?
Nidhi, can you check your connection and can you join back the queue, please?
Sure.
Yeah, thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. Next question is from the line of Vinod Shah from VS Ventures. Please go ahead.
Hello, am I audible?
Yes.
Yeah. Good morning, sir.
Good morning.
So I just have like a couple of questions on the RESCO model. So
Okay.
we have commissioned this RESCO power plants and we are expecting around 6 crore from these assets. So like what's the long-term strategy for this business? And how will this RESCO portfolio become over next 5 years or 6 years?
Will you reply this question?
Yeah. So I've already sort of answered this question earlier. We would like to add 1 or 2 projects in the next 3 to 5 years. Depends upon the quantum of work in that project and certain conditions such as the tariff the ceiling tariff which is offered by the client and nature of client, the location of the work, etc. But definitely 1 or 2 projects will be added in the next 5 years.
Okay. And what would be the revenue mix between this EPC execution and this recurring annuity income of the RESCO?
So it would depend on, suppose the project which we do in the next, say a couple of years, suppose the project is a large one, suppose it is a 10 megawatt RESCO project, then the revenue coming that in the subsequent financial year, which will be according to the scale of the project. So we cannot right now sort of give a guideline that certainly it will be like this much of revenue which will be generated from the coming RESCO project, because it depends on the, kind of quantum of work which is allocated. It can be anything from 1 megawatt to 300 megawatt.
What is the typical payback period on this RESCO business?
Sorry?
What is the typical payback period for this RESCO business?
So in general, once we calculate the payback with the cost ratios, it will be around 6 years. And when we factor the interest ratios also, then it becomes around 8 to 9 years.
8 to 9 years. And so what is the current order book?
Around 328 or 330 crores approximately.
How much of it is in like a government contract?
Government contract would be around 150 CR exactly. Manishi, can you give the exact figure? It will be around 150 CR. Approximately 150.
Okay. And sir, have you faced any execution delays?
Sorry?
Have you faced any execution delays in completing the project or any approval delays?
See, the government has a process of doing a work, but I could not say like that is a delay in execution. There's a process actually. So, as such, there is no past experience of having so much of delays, like say 1 year, 2 years, 3 years of delays with the government. But yes, 2, 3, 4 months is a part of the project.
Okay. And what is the receivable cycle like in the government contract? And the private?
In general, every government or every private contract, we consider the working capital cycle period of 90 days. Since the starting the date of purchase of material to the getting the payment from the client. So we consider the average working capital cycle period is 90 days. Sometimes it is around 70 days, 80 days, sometimes it's 100 days, but the average working capital cycle, what we can quote here is 90 days.
Okay, sir. Thank you so much. I will join that with you. Thank you.
Yeah, sure. Thank you. Thank you.
Thank you. Next question is from the line of Nidhi Purohit from Phoenix Capital. Please go ahead.
Hello.
Hello. Yeah, good morning.
Am I audible?
Yeah. Please.
So, sir, net debt to equity has reduced in FY26. So, what were the major factors that led to this reduction? Like higher profitability, better working capital management, debt repayment, or something else?
All factors you already stated here. See, the shift of, every company has a cost, like the demand cost in the fixed cost and variable cost. So once your turnover will be boosted, so the fixed cost will definitely be helping you in increasing your profitabilities because it's fixed. So, and again, the all factors which you said, the better management and the control of projects and the getting more projects in the Rajasthan, because Rajasthan is our home state. So we have less variable cost for Rajasthan state. So all these factors help us in increasing the profitability.
Okay, sir. So as the company takes on larger projects, so will future growth require significant investment in the balance sheet, or can be the business continue to scale without needing a lot of additional capital?
See, every company needs capital to grow their business. Once we are targeting 250 crores, 350 crores, 400 crores, definitely we need some more capital. We look for all the venues, how we can add the capital to our balance sheet. And we have a growing target for next 3 financial years, very aggressively.
Okay, sir. Thank you.
Yeah, thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. Next question is from the line of Dhanraj Tolani from Kirin Advisors. Please go ahead.
Yes. Yes, sir. Actually, I just wanted to know on the project side. So, as we can see, the project size continues to increase. So, how are we strengthening our procurement and supply chain capabilities to avoid any delays or cost overruns?
See, we have a centralized procurement system, which has been established around 2 or 3 years back in our company. So, for the entire pan-India projects, we are doing the centralized projects, and yes, we have a large vendor bank with us. So, and Once you go through the project history, we are continuously doing business in the electrical, solar, and water segment. And yes, there is a good relationship with all the suppliers from last many years. So we have a centralized procurement system, and there is we have a ERP again with us. So in ERP, we have a set process to procure any kind of material. Like we will be having quotes from at least minimum three vendors for any of the material, whether it is for rupees 1 or 1 crore. So there is a standard process what we are following there. And again, after getting the quotes from three vendors, we prepare the price comparison sheets, and ERP helps us what is the last price and what could be the price as on date. And then we have a negotiation process, and then we have a order placement process. So we have a streamlined process for getting purchases for Pan India projects.
Okay.
Yeah.
Have there been instances in FY26 where supply chain disruption or equipment shortages we have witnessed that affected our project execution timelines?
So there was a slight delay in last 2, 3, 4 months because of the shortage of gases and the other raw materials availability. But as such, there is not a big impact because everyone understanding the current situation. So the delay of 10, 20, 30 days was not considered as a big delay. So as on date, we had not faced a big delay for getting materials or for those processes. So as on date, we are managing it. There is no significant impact of that war and other scenarios which is going on right now. So there is not a significant impact as on date.
Okay.
Yeah.
And also, if I could see, the solar module prices have been significantly fluctuated over the last few years. So how are we, how do we decide whether to procure materials upfront or you can say, or just follow a
so in general, the solar projects have a completion period of 2 to 8 months, depending on the size of projects. And once we get the projects for solar, we generally booked everything on the same day. So as on date, there is we doesn't have any face in a situation where the solar module prices has been impacted our projects. So once we get the project, we generally fix everything on the same day. Because the timelines for solar projects is very short. So we cannot wait like we will procure the material after 2 months, after 3 months. So this is the scenario for the solar projects. Because the projects have only the short timelines for 2, 3, 4, 5, 6 months maximum.
Okay. So what proportion of project cost is represented by these solar modules today, and how are we sensitive to these project margins fluctuation in module prices?
So once I already said that generally we freeze everything on a day one, so the fluctuation in margins will not be there. And if you see the proportion of solar projects as on date in our total order book, it will be around I think 100 CR approximately. Manish, am I right? Manish, are you there? Okay, I think he is.
He is there, sir. I believe he is on mute. Manish,
Okay,
sir, can you unmute yourself and speak, please?
Okay, so what here I'm getting quoting here is the tentative figure, and it is around that figure only. So the order book for solar as on date will be around 100 shares.
Okay.
Yes.
And one last question from my side. So do you currently maintain inventory of critical components, or what is the average inventory holding period?
You are asking average inventory days?
Inventory of critical components, and what is the inventory period you can say, or days you can say?
See, I already said that we have a working capital cycle of 90 days. So definitely the inventory days is in between there only. And regarding inventory, in every contracting system, there is a stage billing system and a stage execution system. So once we procure the material, it is in the consideration of raw material. Once we start execution, it will be under work in progress. And once we complete it, then it becomes the finished goods or the billable item for us. So the entire inventory days falls in between these 90 days working capital cycle only. And for the critical part, what you are saying is, well, I already committed that for critical components, generally we fix it on a day one. Because see, it's already a critical part, so we don't want any risk with that. So we generally fix every critical part or every big item on a day one of getting the project, so that we can ensure our margins intact there.
Okay. Okay.
Yeah. Yeah.
So that's all from my side. Thank you, sir.
Thank you. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. Next question is from the line of Aditi Jain from Wealth Management Consultant. Please go ahead.
Hello. Hello. Am I audible?
Yes. Yes. Please. Please, you're audible.
So my question is, given the recent movement in a steel, solar module and electrical equipment prices, what is the management's outlook on a raw material cost for FY27, and how should investors think about the margin sensitivity under the different commodity scenarios?
Yeah, I already applied these questions. For the government projects, what we are executing in this current financial year is having the price variation clauses. And we have already applied for the PVs. And PVs are linked with the IMA indexes. So, we are not expecting any hit on our margin ratios for this current financial year because of the increase in the price of raw materials. We are getting the price variations from the government. And yes, maximum materials we have already hedged with the placing of a purchase order and giving the advances to the vendors. So we are getting material on time. We have a fixed price contracts with all of them, and still our vendors are owing them. On for the critical parts, like where the huge fluctuations are there, we have a price variation clause to hedge our margin.
Okay.
Yes.
My next question is, what is the typical lag between changes in the raw material prices and companies' ability to pass this cost through customer via escalation clauses or new project bids?
See, for the new projects, we are very vigilant while quoting the projects because we all are aware from the current situations. So we know the prices are going up by on everyday basis. So we have calculation indices with us. Like if we are quoting a contract for another 3 years, another 2 years, another 1 year, and which is having a price escalation clauses, we are very sure because they will give us the price variations from the date of bidding of that project. So we consider that base date and we consider the base price and we will getting the price variations. So there is no issue. And for the short-term contract where the price variations are not there, we are very vigilant that this contract will be opening within 1 month. So we factor 2%, 3%, 4% depending on the item on the cost so that we will be in a safer side.
Okay. And what percentage of current order book contains price variation or escalation clauses? And are there any projects where the company remains exposed to commodity prices fluctuations?
See, I already said that every government project has a price variation clause. And the government ratios for the total entire order book was around 150 crores. And regarding the other projects, we have already placed the purchase orders and we have fixed price contract with the vendors and we have already placed the advances.
Okay.
Yes,
Yeah,
yes.
That's all from my side. Thank you.
Yeah, sure. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Karan Thakur for closing comments.
Yeah. The call of Current Infraprojects Limited. So if you have any queries, you can.
I'm sorry to interrupt, Karan sir. Your voice is muffled. We are not able to hear you.
Hello.
Yes, please. Yes.
Yes. Yes. Thank you for attending the call. Current Infraprojects Limited. So if you have any queries, you can research at kirinadvisors.com. Thank you, Sunil sir. Thank you, Chetan sir. Thank you all.
Thank you, everybody. Thank you. Thank you, everyone. Pleasure talking to all of you. Thank you.
Thank you. Thank you.
Thank you. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you all for joining us today, and you may now disconnect your line.